Hello everyone, myself Deepak Gupta, logging on this platform of College Dekho Learn, and we will continue our chapter capital gains of income tax. And in this second part of capital gains calculation, we will focus on the calculation of long-term capital gains or long-term capital loss, which is accruing due to the transfer of any long-term asset. And as discussed earlier, any asset whose period of ownership is more than 24 months will become long-term asset, and if that is not the case, then they will be short-term assets, and any profit or loss on their transfer will be short-term capital gain or short-term capital loss. And not ignoring that this period of 24 months will be 12 months if there are financial security which are listed on any recognized stock exchange, and certain other specialized assets for which the period to classify as long term and short term is reduced from 24 months to 12 months. Ideally, they are listed equity shares. So, what is the basic difference between the two? That, as we discussed in the last session, that whenever you purchase an asset, that is the date of acquisition of the asset, there will be expenditures which have been incurred by the assessee to get the asset in his own ownership, and all those expenditures which have been incurred for such acquisition will be known as the cost of acquisition. And then during the period of your ownership, there may be certain expenditures which may be incurred either in one go or maybe multiple times, which have we should say contributed to the addition of value of such asset acquired. So all those capital nature expenditures which have contributed to an increase or appreciation in the value of such capital asset will be known as the cost of improvement. For example, if someone purchased a house for rupees say 20 lakhs and paid 1% brokerage and 8% stamp duty, then effectively 9% have been spent. That 9% of 20 lakhs will be 1 lakh 80,000, and therefore the total cost has to be 21 lakh 80,000. And if there is any other expenditure, for example, there are amount rupees 20,000 which have been paid as the professional fees for the creation of the legal documents, then we will also add it to the cost of acquisition, and we can say that 22 lakhs is the effective cost of acquisition, and this cost of acquisition will correspond to the date of acquisition. So if we believe that the date of acquisition was 6 July 2008, so this will correspond to the financial year 2008 to 2009. So we have acquired an asset on 6 July 2008, which corresponds to the financial year 2008-2009, and for that the effective cost of acquisition have been incurred to be rupees 22 lakhs. Then what could have happened that after 2 years of purchase, let's say in December 2010, Mr. X, who purchased this house, incurred rupees 4 lakhs for the creation or addition of certain rooms. So there was addition to property. For example, there were two rooms which have been constructed on the roof of the house, which obviously has contributed to an increase or appreciation in the value of the asset. Then this 4 lakhs, which corresponded to the previous year 2010 2011, will be deemed as the cost of improvement. And then after so many years, because we are focusing on the assessment year 2022 2023, therefore if I believe that the asset has been sold, so that will become the date of transfer of the asset. And if we believe that the asset has been sold on 2nd February 2022, then this date will correspond to the previous year 2021-22, and hence the income will be taxed in the assessment year 2022-23. And on this date of transfer, the money the value for which the asset has been sold will be deemed as the sale consideration. And for example, if we believe that the sale consideration was rupees 50 lakhs and 1% commission was paid to broker. It means 50,000 rupees was paid to the broker, and this 50,000 should denote the cost of transfer. Should denote the cost of transfer. So what is happening? That is the cost of transfer will be rupees 50,000. So in this total example, the sale consideration is 50 lakhs and the cost of transfer is 50,000. So this 49 lakh 50,000 denotes the net sale consideration. And this we have discussed in the last session also. You can revise from our YouTube channel where this capital gains 1 will show what I have been discussing as a net sale consideration. Now this net sale consideration has to be deducted by two other costs, that is the cost of acquisition and the cost of improvement. Now the important point that to remember is that the method of calculating capital gains is similar whether it is a short term gain or long term gain till we calculate the net sale consideration. But when we come to the reduction of cost of acquisition and the cost of improvement, then there is a difference whether it is a long term asset, that is the calculation of long term capital gains, or it is a calculation for short term capital gains. So what the logic is behind that, when the period of ownership is up to 24 months, that is the basic difference between the cost of acquisition, that is the date of acquisition till the date of transfer is not more than 24 months. So we believe there is not much inflation, not much appreciation, and therefore whatever is the date of acquisition, the cost of acquisition, and whatever is the cost of improvement will be as it is deducted from the net sale consideration to arrive at the figure of the short term gain. What I am saying कि अगर यहाँ ये जो डेट ऑफ एक्विजिशन है ये लेस से 2021 की होती, तो अगर ये एक्विजिशन 2021 का होता और इम्प्रूवमेंट भी 2021 में ही होती, तो जो पीरियड ऑफ ओनरशिप है दैट मस्ट हैव बीन less than 24 months, and in that case the profit or loss should have been short term gain or the short term loss, and in that case the cost of acquisition will be deducted as it is, and the cost of improvement of rupees 4 lakhs must have been deducted as it is. So this was the case if it was short term gain, that is the period of ownership was less than 24 months, and therefore this resultant profit of 23 lakh 50,000 must be denoting the short term capital gain, must be denoting the short term capital gain. But just a moment. But if, like in this case, because the period of ownership is more than 24 months, and because it is a long term capital asset, so we will calculate long term capital gains. So Act realizes that this original cost of acquisition which was incurred in the financial year 2008-2009, why I am ignoring the date now, because financial income tax identifies the previous year, the financial year, and not the actual date. So actual date is important to calculate the period of ownership. But once it has been done, now our focus will be shifting from the date of acquisition to the year of the acquisition. And hence, because the year of acquisition was 2008-2009 and the year of transfer was 21-22, Therefore, we believe that in past 13 14 years, there has been much inflation in the value of the rupee, or we should say, because of this inflation, the decrease in the value of the rupee should be adjusted in the cost of acquisition. And another way of saying it, that the equivalent amount of money that should be taken as the cost of acquisition for calculating the capital gains must be calculated keeping in mind the inflation, which would have increased the equivalent value of this original cost of acquisition. So in simple terms, there is a word which we use, that is indexation. So there is a specific word for income tax calculation, that is indexation, because this has been done keeping in mind the concepts of time value of money as well as the concept of inflation. But the word indexation is to be used thereafter now, because what the income tax act has done, that they have taken the base year as 2000 2001, and keeping this as base year, they have taken a base value of rupees 100, and each year, this I will show from certain figures, that चलिए अभी ये फिगर लोड नहीं हो रही है. So they have taken the previous year 2000 2001 as the base year, and each year onwards they are providing any equivalent value to the each financial year that is moving onwards. And our previous year 2021-22 has been given an equivalent value of 317. So what it is actually denoting, that in these years the amount which was worth 100 in that financial year is equivalent to rupees 317 in our current previous year. So there is a specific value, and this value is known as cost inflation index. Cost inflation index, simply known as CII. So what the act has done, that to calculate long-term capital gains, we will take the sale consideration, and out of this sale consideration we will deduct the cost of transfer as shown earlier, and we will arrive at the figure of net sale consideration. And out of this net sale consideration, we will deduct the cost of acquisition as it is if it was a short term asset. But because if it is a long term asset, then to incorporate the increase in the equivalent value of the rupee, we will index it, and therefore the indexed cost of acquisition using the CII of the previous year of acquisition and the previous year of transfer. How that will be done, that will be discussed thereafter. But instead of the word cost of acquisition, we will use the word index cost of acquisition. Similarly, because it is a long term asset, therefore the cost of improvement will also be indexed irrespective of the year in which they are incurred. It means even if the improvement was done only last year, still because it was originally a long term asset, therefore even now the cost of improvement will be indexed again using the CII of the previous year of improvement and the previous year of transfer. And therefore now we will arrive at the concept of figure of long-term capital gain or long-term capital loss. Obviously, if the net sale consideration is more than the combined two indexed cost, then there will be long-term capital gain, otherwise it will be vice versa. And because we have been involved in the indexation process, that is, we have taken into account the equivalent value of the money after having the impact of time value of money or the inflation. Therefore, we presume that this long term capital gain is a special income which will be subjected to the disallowance of specific deductions under chapter 6a, and also it will be taxed at a special rate of 20%. So this special income will not be subjected to, it will not be subjected to नॉर्मल स्लैब रेट्स. नॉर्मल स्लैब रेट्स यहाँ पर नहीं चलेंगे. इंस्टेड दे विल बी टैक्स्ड एट अ स्पेशल रेट ऑफ 20%. सो इफ़ आई जस्ट ट्राई टू अगेन अपलोड, इफ़ इट इज़ पॉसिबल कि हमारी PDF की फाइल अपडेट हो जाए. So if you see from here that there are financial years which is mentioned here, and for each year there is a specific CII value. So if I just show it here, that this year is actually wrongly written as this is 2001 2022. It was just a little. So any asset, that is the date 1st April 2001 has been the date after which indexation will be applicable. Or we can say that if any asset is acquired before 1st April 2001, then the base year has to be taken as 2001 2002, and the indexing will be done at the rate 100. So if I come again, that if we calculate this indexed cost of acquisition, if we calculate this indexed cost of acquisition, then it will be equal to the original cost of acquisition. It will be equal to the original cost of acquisition that will be multiplied by the CII, cost inflation index, of the previous year of transfer, that is the year in which the asset has been sold. And in our case it was 317, as I have shown it earlier, that it was 317 for the previous year 2021-22, that is assessment year 22-23, and divided by the CII of the previous year of acquisition, of the previous year of acquisition. And if we calculate the indexed cost of improvement, then it will be equal to the original cost of improvement. It will be equal to the original cost of improvement multiplied by the CII of the previous year of transfer divided by the CII of the previous year of improvement. So if I take the above example here, the original cost of acquisition was incurred in the previous year 8-9, and improvement was done in the year 10-11. So if we see the index rates from here, for the previous year 8-9, the CII is 137, and for the previous year 10-11 the CII is 167, and the latest updation for the year 2021 and 21-22, it is 317, it was 307. So if I come to our figures, So what is happening here, that for this financial year the CII was 137, and for this financial year the CII was 167. So if we come here, that we will have to now index. So when we indexed this, so the indexed cost of acquisition will be 22 lakhs multiplied by the CII of the year of transfer, that is 317, upon my CII of the year of acquisition, that is 137. So the figure here will come out to be 22 lakhs multiplied by 317 and divided by this is coming out to be approximately 50 lakhs 90,000 and 510. Similarly, if we indexed the cost of improvement, that is the indexed cost, so it will come out to be 4 lakhs multiplied by 317 upon by 167. So the figure will be, the figure is coming out to be 7,59,281. So if it was a short term gain, then that could have been the case, but that is not the case here. Now if we show it, that here if we calculate the long term capital gains, then the effective will be that the sale consideration here was a 50 lakhs. The cost of transfer was 1% of the sale value, that is 50,000, and this 49 lakh 50,000 denoted the net sale consideration. Out of that we will deduct the indexed cost of acquisition, and that indexed cost is coming out to be 50 lakh 90,000 510. This indexed cost will be 50 lakh 90,000 510, and we will deduct from here the indexed cost of improvement, and that is coming out to be 7,51,000 and 280 if we take the round figure. Then this long term capital gain, as you can see, is coming out to be negative. This 49 lakh 50 minus 5090,510 minus 759,280. So this is coming out to be 899,790, and because it is a negative figure, hence it is a short term capital loss. So what is happening here? Because it is a loss, therefore there is no taxation, but this loss is allowed to be set off, and that will be discussed in detail when we do the topic set off and carry forward of losses. But just to complete it for the time, that this long term capital loss can be set off only against any other long term capital gain during द प्रीवियस ईयर 21-22, यानी कि इस प्रीवियस ईयर में अगर इस असेसी ने कोई और असेट बेचा, वो असेट भी लॉन्ग टर्म था, और उस लॉन्ग टर्म असेट की सेल पे कोई लॉन्ग टर्म गेन अक्रू हुआ, उस लॉन्ग टर्म गेन से इस लॉन्ग टर्म लॉस को हम लोग सेट ऑफ करके टैक्स सेविंग कर सकते हैं। और अगर ऐसा नहीं है, देन दिस विल बी कैरीड फॉरवर्ड। अगर ऐसा नहीं होगा, देन इट विल बी कैरीड फॉरवर्ड टू द नेक्स्ट असेसमेंट ईयर्स। So how will that unfold? That we will discuss when we take up the topic set off and carry forward of losses. But today, for the time, this is the way to calculate the long-term capital gain. That is, indexing is the key. So what you can notice, that without indexation, what you can notice is that without indexation, that is, if there was a short-term gain, then there was obviously the profits, and that would have been taxed. But because of the indexation benefits provided to the assessee by the Income Tax Act, this indexation has gravely enhanced the cost, and therefore, in spite of selling the profit on notionally on a profitable figure, for income tax purposes, there is a loss, and that will also result in tax saving for the assessor. So, on this note, myself Deepak Gupta, logging off from this platform of College Dekho Learn on YouTube. Hope to see you tomorrow again. Thank you.